Welcome to Seven Bulls. We break down finance so that anyone can understand. Roll the intro.
Simple buy, sell, risk on, risk off questions. Why do you find such questions so deficient?
I think they're really superficial. And, these are important matters. They can rarely be answered simplistically. In order to be confident in giving buy-sell advice, you have to be confident that you know something that the consensus of investors doesn't know. And the more you get away from what I call the micro, companies, industries, and securities, the more you get into the macro of economies, markets, currencies, commodity prices, rates, the less confident you should be that you know something the consensus doesn't. We have to think about the adequacy of today's price in reflecting those things, and there's no place to look that up. So what does it all come down to? Judgment. Every investor should think of positioning their portfolios in terms of a speedometer in a car. It goes from 0 to 100. Maybe we should say 0 is all defense, no offense. 100 is all offense, no defense. The first requirement, in my opinion, is that every investor or every manager for each client should have a sense for the appropriate normal risk posture.
Today, we're not just talking about investing. We're going to be getting into the mind of a true market legend, Howard Marks. He's not just a Wall Street titan, he's a philosopher, a historian, and a master of contrarian thinking. Before we move on, if you find any value in today's video, make sure to give it a like and share. Also, hit that notification bell, watch until the end, and feel free to leave a comment below. All these things help us with the algorithm, in turn, helping us grow the channel. Thank you. Now let's get to it. Marks is the co-founder and co-chairman of Oaktree Capital Management, a behemoth in the investment world, managing over 160 billion in assets. But his impact goes way beyond the numbers. He's a prolific writer, sharing his wisdom in insightful memos, best-selling books like The Most Important Thing, and engaging interviews. He's basically the Yoda of investing, dispensing wisdom with every carefully chosen word. So, what sets Marx apart? He's a champion of second level thinking. He doesn't just see what's on the surface, he peels back the layers, anticipates the consequences, and finds opportunities that others miss. He's like a detective searching for clues that the market leaves behind. One of his core principles is understanding risk. He famously said, "Risk is not the same as volatility." He sees risk as the potential for permanent loss of capital, not just short term ups and downs. And here's where it gets interesting. He believes that sometimes the biggest risk is not taking any risk at all. Imagine that, playing it too safe can actually be dangerous. Marx is a die-hard value investor. He's not chasing the latest fads, he's looking for those hidden gems, the undervalued assets that the market has mispriced. He's like a treasure hunter seeking intrinsic value, not market hype. Now, Marx's insights aren't just theoretical, he's a seasoned veteran who's seen it all. He started in the chaotic 1970s, a period of sky high inflation and dismal market returns. He rode the wave of the 80s bull market, witnessed the dot-com bubble inflate and burst in the 90s, and skillfully navigated the treacherous 2008 financial crisis. These experiences solidified his belief in market cycles. He understands that markets swing like a pendulum between greed and fear, creating opportunities for those who can stay disciplined and keep a cool head. He compares the market to a pendulum that swings between euphoria and despair, and the key is to avoid getting caught up in the extremes. So, what's his take on today's market? Well, he's been sounding the alarm bells lately, warning about excessive optimism and the potential for a correction. He's concerned about the rise of passive investing and the flood of money into index funds, which can distort valuations and create hidden risks. He's also been pretty skeptical about the cryptocurrency craze. While acknowledging the potential of blockchain technology, he's cautioned investors about the speculative nature of cryptocurrencies and the lack of underlying intrinsic value. But what wisdom does this investing sage offer to those of us just starting our journey? Marx emphasizes the importance of continuous learning. Read everything you can get your hands on, study the greats, and develop your own investment philosophy. Don't be afraid to make mistakes, but learn from them. And most importantly, be patient. Building wealth is a marathon, not a sprint. He also stresses the importance of emotional control. Don't get caught up in the hype of a bull market or panic during a downturn. Stick to your strategy and maintain a long term perspective. Marx also believes in the importance of having a margin of safety. This means buying assets at a significant discount to their intrinsic value, giving you a cushion to absorb potential losses. If you want to tap into Marx's brilliant mind, I highly recommend exploring his memos, available on the Oak Tree website. They're a goldmine of insights. And of course, the most important thing is a must read for any serious investor. That wraps up our dive into the wisdom of Howard Marks. Remember, investing is a journey, not a destination. With the right mindset and a commitment to learning, you can navigate the markets with confidence. Remember to keep up with your financial education. You're the only one in charge of your future. Be
We
safe.
grew